Hi, everyone. Welcome to Crowd Forecast News, episode number 167 for January 22nd, 2018. We will be discussing the 226th, the weekly report. So if you haven't had a chance to take a look at that yet, just go to TimingResearch.com and you can download the full report there. You should also be seeing it on your screen while I am talking now. And for those of you watching live, I have the live chat window open that you should see on the YouTube page. So if you have any questions or comments during the show, you can type them in there. My name is David Kosmeter. I'm the creator of TimingResearch.com, and I have Jenkins back to moderate today. So I'm going to go ahead and turn it over to him.
Okay, thanks, David, for having me back to moderate. I always enjoy this show. And man, certainly interesting times in the market. So it's great to be here with a panel of experts and to get a variety of opinions and analysis. You know, with the U.S. government being shut down, and the market seems to say, "Who cares, man? Rock on." It's not slowed down in the least. So it'll be really, really interesting again to hear. But let's go ahead and get a quick introduction. Looks like we lost one of our panelists. Jim slipped off into the ether, but maybe he'll be dropping back in here in a minute, hopefully. But meanwhile, yeah, each of the panelists, if you just introduce yourself, a minute or two, and who you are and what your service is, what you got going on. And we'll start with you, Christian.
Yeah, great. And David, thanks for having me on. Great to be on the panel, and great to be on with Dean again. I think we've been on a couple times, but not since probably mid-December. I think it was the last time I was on. So a lot has changed in the market since then. Just real quick, my introduction. I'm the CEO and founder of the Tribeca Trade Group. Started that almost about 2 years ago. My background is I specialize in options, ETFs, equities, futures. I traded all these while I was a director and senior trader at Bank of America Merrill Lynch. What I did over there was I block traded for institutional clients in many different parts of the market through ETFs, which allowed me to trade domestic equities, international fixed income, commodity currencies, just about everything under the sun. And really that gives me a good base and knowledge, which I bring to our members to be able to trade all different types of markets, which in this type of market, we're certainly seeing growth in several different areas. So we run a couple of different portfolios that clients can obtain. And we're basically, what we do is we read the tape all day long and really look for good ideas and for good setups. And I think we're doing a pretty good job so far this year. We're up about 39% option portfolio. Cash portfolio, which we run a cash trend portfolio, which is also outperforming. We're up just about 8% versus the S&P 5% year to date. And then we're also doing something a little bit different this year. We're running a trend portfolio for options as well, which is also off to a good start. So thanks again for having me on, and I'll turn it back to you. Thanks.
All right, hey, good to be here with you again. I always enjoy hearing your comments, and that's funny with your institutional background. So when we saw a big jump in volume or a block of options, that was you, huh? I was wondering who that was. Or at least you were one of them, right? All right. I don't see Jim back. So Andrew, if you take a minute, tell us what you got going on.
Yeah, Andrew Keene. I was a floor trader at the Chicago Board Options Exchange for about a decade. And when electronic trading happened and weekly options got instituted and penny-wide markets, it was the best time ever for a retail trader, but the worst time ever for a market maker, because that's what I was. So we run subscription products. We have 10 subscription-based models. The biggest one is a live trading room where customers pay to watch me and 4 other moderators trade throughout the part of the day. Good to see Christian on here. He used to be part of Team Alpha Shark. And then we have products. We have 14 educational courses. We've sold over 10,000 courses and 10 proprietary-based indicators on Thinkorswim, TradeStation, and Ninja.
All right. Good to have you here, Andrew. Good to be with you again. And I am Dean Jenkins, founder of FollowMeTrades.com. I am a trader. Traded my own account for many years, got involved in coaching, and then ultimately about 2.5 years ago launched my current service, FollowMeTrades.com. It's an advisory service. We give stock picks. We've got a trading room for an hour and a half in the morning, right at the open, and just looking for new trades and updating our existing ones. And I've got a series of courses. My main analysis, I call it East meets West. I like to combine Elliott wave and Ichimoku cloud and when they begin to agree on trends and signals, that's pretty powerful. So that's what I'm doing. All right, and still no Jim, so we'll just press on and hopefully he can join and weigh in as we walk through the questions here and in the discussion. So as always, the first question up here is always the direction of the S&P 500. So from Monday's open, 15 points ago, for the S&P 500 to Friday's close, what does your analysis say? What's your prediction? Is it going to close up or down by the end of this week, by Friday's close? And what's your percent confidence? Now, we'll come back around and talk about why, and it'd be a great time to share charts then. But just in the first round, up or down, and what's your confidence level on that? So, Christian, where's it going, man?
Yeah, and I always tend to struggle with the first question, but I always provide the backup, so I'll do that in the next the next question. But I will say up, and I will say 65%. And like you said, I'll go into the reasoning in the next part. Yeah,
absolutely. Up at 65%. All right. So far, there's only 3 of us, so no ties are possible. So we'll see. Andrew, what do you think? Up or down? What's your confidence on that?
I mean, this is always a skewed question because from the opening or Friday's close, I mean, we've already rallied so much today. So the open today was 04 and we're at 25.50. So I got a 21 cushion push into the upside. So I've got to say it's going to go higher between now and the end of the week.
All right. What's your confidence on that, Andrew?
I don't know. I mean, I think we're so overbought. I think that, you see the RSI hitting above 80 on the S&P 500 futures. It's like almost impossible to be short. But I would say I'll say 63 because I won't be as confident as 65, but I'll say 63.
All right. Dialing it in down to the one-digit level. I like it. All right. Man, I got to say higher. Just, Andrew made a good point, right? It's already up. It's already up significantly. And, it could give back quite a bit and still close down. It's a tough question. I kind of don't like it. But, yeah, I gotta go with the momentum. But there's also, I think we could have some kind of a catalyzing event, right, that would, maybe shock things. And there's a lot on the table here. So I'll say up, but I'm going to be at a 51. I think it will go up, but I think there's always things that could happen, and it wouldn't take much to give a little bit back. So that's where I'm at.
Hey,
so now we'll go into a little bit more. Yeah.
Yeah, this is Jim. I'm back online.
Jim, okay, good. Glad to have you.
Sure. Just to throw in the hat in the ring on the question, as far as this week is concerned, it does look like we could continue higher because at the end of the week there's some news that's coming out regarding retail sales and leading economic indicators and GDP and all that kind of stuff. And if they do come out, pretty good, then obviously that could get people on the run again to try to get into this thing, because there's a lot of people who are still underinvested, and it looks like the risk-on noise is definitely the noise that's prevailing.
Okay, and what's your confidence level for it going up?
About 55% or better, yeah.
55%. So we have a unanimous board, and it agrees with David's report. David, based on his statistical model and the responses that came in, gave it a 56% chance of going up this week as well. All right, so now we're going to loop back around. We'll start with Christian, and this is where you go into a little bit more detail, maybe provide some analysis, and show a chart, whatever makes sense for you. So start us off and convince us, Christian.
Yes, and I did not know that we were playing with the Price is Right rules, where with the high, I guess I'm the highest, but we'll see how it goes for the week. All right, let me see if I can just share my screen, and then I'll go in and just talk about a couple things that I am seeing. Just bear with me 2 seconds. I just want to bring up the right chart.
We got nothing but time, Christian.
All right, let's see. We got share screen here. And oh, it's just not giving me the ability. All right. Oh, there we go. Got it. All right. Did that work? Am I sharing? I am screen sharing. Okay, cool. So what it's again, I think it's difficult to predict short term, but I would have to say up, just because of the weight of the evidence. Just while we've been kind of government shutdown mode for the last couple of days, it just seems like the U.S. market is being held back a little bit by that, a little bit of headlines. But just looking at what's going on globally, the rest of the world is just continuing to trend, albeit getting very overbought. But you look at the Hang Seng, for example, for what's going on over in China, and their market is up now. I think it's 24 out of 26 straight days. So it's just a very powerful rally that's going on globally. And so it's not only with China, but we're also seeing that with Europe as well. Europe is following through. Just every area of the market that you see, a lot of emerging markets, even you look at the best performers so far this year, and the U.S. market isn't even in the top 20. So things like areas of the market like Nigeria are up in double digits, and a lot of other emerging markets are really killing it so far year to date. So it's really difficult to say that we're going to go lower, and I think you just want to ride this wave as long as it goes in the major U.S. indices, whether it be with the large caps with the S&P, the Dow, or NASDAQ. They're all in a major upswing. They haven't violated any short-term moving averages, even when we got a tiny bit of volatility towards the end of last week. So really, I hate to say it, but the trend is your friend until we break at least the 5-period moving average. While, I agree with Andrew with the RSI is super, super heated right now, but the most that you could do is kind of just watch the tape, watch where the aggressive call activity is going, and then just stick with the wave. Maybe hedge yourself a little bit, maybe take a little bit smaller positions as we're getting a little bit more extended.
All right, I liked a lot of your thoughts there, and long on Nigeria. All right. I like that phrase you used, the weight of the evidence. I use a similar thing like that in training, and I like that it's not one, it's not one data point, maybe not one indicator, but I like the thought of the weight of the evidence, right? That no matter how many different things you look at, just like a prosecutor, are you going to bring charges? Well, what are the facts of the case, right? Do they stack up, right, in favor of a decision? That's a great phrase. We'll stick to the order. I'm just going down the order that was published in David's invitation for the session. So Jim, this is where you might jump in with some more facts. Make a compelling case for why you think it's going up. Share a chart if you got one.
Well, no, I don't have a chart, but I do have some information to share. With regards to one of the things that would be the risk of it not going up and possibly having a dip, there's a couple of things. One is the VIX, which went from the 9 area up to almost 13 and has backed off into this 11 area. If it were to break substantially under this 11 area, it would add a lot of credence that we're going to break and maybe go up towards that 2850 on the S&P. But if it holds this area here and starts going back up, we are 300 points and change above the 200-day moving average on the S&P. S&P 200 days around 2,500. We're up over 2,800. So obviously, and you guys were talking about the RSI being quite high. So there is some vulnerability up here, particularly if this VIX can hold this 11 area and start turning back up, and particularly if obviously any of this news I mentioned earlier were to disappoint. And so there's the vulnerability in it right now. But as far as the evidence you guys were talking about, the evidence is definitely still pointing higher right now.
All right, very good. As you said, it looks, looks vulnerable at this level. It looked vulnerable at 2,500, but here we are, right? Pretty interesting. Andrew, maybe you want to show a chart or build on your case there.
Yeah, let me show a chart here. I'm just going to talk about 2 that I've been looking at. Am I sharing my screen now? Doesn't look like it.
Yeah, we got it.
You got it?
We're good.
Cool. So I trade a little bit differently than most people. So I watch unusual option activity. So I watch institutional order flow in the option market, and I look for big call buyers, big put buyers being basically for institutions to buy big blocks of calls and puts. So 2 that I found interesting, which I can just get my recording going so I can get some tools here for 1 second. 3, 2, 1. Okay, so Delta's the first one I saw today. I think Delta takes out the high. We saw huge unusual option activity in the weekly options. So if I go into Delta, and one thing I look at is volume versus open interest. Volume is how many trade today. Open interest is how many exist before today. So this started as a 3,700 lot, and now we see 16,511 Delta weekly 60 calls being bought. They came in and started buying these at 57 cents. You can see my profit here on the bottom. It's $750. I bought a 20 lot. I sold them out already. So that is one order that I saw. So that is the right but not obligation to own 1.6 million shares of Delta above 60 between now and the end of the week. And the chart is great. So I got into those. I did get out of that position already. But Delta, I think, can take out the highs by the end of the week. Another one we saw institutional order flow in is HBI. It's a retail name. Haynes Brands. I've traded this one before, and I think I've actually lost money net on it. But we saw institutional order flows. We see a breakout above the cloud here. Big bull candle today, yesterday actually, Friday, on HBI. And then we go, and this is what I look for when I'm trading. Huge, massive call activity here in the HBI Feb 24s. As we see here, this is Thinkorswim I'm showing, is 13,000 of these traded. And open interest before today is 3,400. So I took a 20 lot of these. I already hit target one. I'm up a couple $100. But I think HBI and Delta are my picks to clicks, because the thing with the market is the market can sell off and individual names can go higher. So you always see a rotation and shift. You know, it's possible the S&P goes down 15 tomorrow, but maybe the airlines get upgraded, the airlines go higher, or retail goes higher, because you can actually see both of these are down today, and UAL's down today with the market higher. So these are my two that I like. I'm still long HBI. I got out of Delta, took nice profits, but I think both of these go higher this week and for the next couple of weeks.
All right, Delta, HBI. Very cool. Yeah. So, yeah, you kind of jumped into the meat of the next question. That's fine, but we will rotate to Christian, and that's where, Christian, you talk about any trades you like right now. Anything that's got your eye, that sectors, individual issues, where you're looking and putting your money right now.
Yeah, sure. Yeah, and I love the Delta trade as well. We saw just about right after, I think it was the same day Delta reported earnings about a week ago, some really heavy option flow going out to June and to January. So yeah, I was very ecstatic that they were buying the weekly calls today, because I'm in a June limited risk reversal where I'm long calls and short puts. So great to see that they're out there purchasing the weekly stuff as well. So yeah, for trade ideas, yeah, I've got a couple things that, and again, it's an exciting market. I also think that there's a lot of opportunities in single names as well as individual names in the market. And one of the areas that I'm looking in, this is a trade that I was in, just got out of about a week ago in OIH. This is the oil services ETF, which we're also seeing some nice call buying in this as well, both in OIH and XLE. And what I normally do is I drill into the components to see, you know, what's going on in there. So I didn't choose OIH by accident. Two names that reported earnings, which are 35% of the ETF, Schlumberger and Halliburton, both crushed earnings, which is what I'm really looking to see in this earnings cycles, is what names really had stellar reports and how they're guiding. So I think OIH is a nice way to play it. I've swung this trade. I was actually in this name below the 200-day moving average once we saw the aggressive call activity, big block trading in OIH, and I managed to time it pretty well here, and I took it off. I don't think it was this exact green candle. I think it was this one, and you know, I love to see a little bit of consolidation back down in an uptrend. So it found support, the 20-day moving average, and having a nice day so far. So what I like to see, in addition to the single name flow in the Halliburton and the Schlumberger, which I think are, if you look at those two charts, they're very similar to OIH. But then I also like to see the option flow in the sector ETFs, which we're seeing both in OIH and XLE today. So I gave myself plenty of time and just a similar structure to how I structured the Delta trade in June. This one, I decided, hey, let's wait and see how long, you know, how much this energy group can continue to get above the 200-day moving average. So I went out to July, and I'm long calls, and I'm short of a put spread in this one. Looking for more upside, possibly up to that 31, where you can see that purple line up there. So that's what I'm looking for there. That's my one trade idea. And then another one that I'm looking at is, just noticing what's going on with the semiconductors. Really, we started to see that group heat up in terms of that institutional option activity, and not just one name, but about 3 or 4 different names after ASML and Taiwan Semi really put out a good earnings report. We started to see names like Clack, Applied Materials. Taiwan Semi also saw a big call buyer after that, and a little bit of Lam Research calls going into the earnings. And this group is not really participating as much as some of the other areas in the market. So I like going long SMH here. As a group, of course, there's a couple individual names that I'm long as well, Applied Materials. But I think with earnings coming up and the applied volatility gets jacked up in the individual names, I think a great way to play it is through the SMH ETF. The other thing that I really like is a lot of the brokers are out this morning and increasing their price targets in those individual names before earnings. I typically find that as a pretty good signal, not just when one broker does it, but when a whole bunch of them do it. So we saw that in, I think, Lam Research. We saw that in, what's the one that reports today? Texas Instruments. And I think a couple other names that are reporting this week, we saw some brokers up their price targets as well. So typically, I think that's a good sign, and I'm long SMH to play that earnings type trade.
All right. Liking the semis. Very cool. Jim.
Yeah.
You like right now?
Yeah, Dean, a couple of things. One's a strategy and the other one's a sector. And the sector was already just mentioned, but I'll just go over a couple of things that I was seeing as well. On a strategy, with regards to the options, with the VIX at 11 and the State of the Union coming up at the end of the month, and we're up here at this level, and you guys were talking about the RSI, I think a strangle position on maybe some of these indexes would not be a terrible thing to look into, because the likelihood that we're going to move off of this number possibly sharply as we go into that State of the Union at the end of the month is maybe not so bad. So again, a strangle position, pricing out some of those might not be a terrible idea. And then the other would be the sector of energy. Their earnings are supposed to be picking up quite a bit. And I just heard that, Schlumberger beat the number, I guess, pretty well. You got big companies, Exxon, Chevron, Schlumberger, Occidental, Valero, Halliburton. And this is a sector that if you look at some of the ETFs, their 1, 5, and 10-year track records have been flat. So it's certainly not in an overbought condition. And it's up about 5% this year. And it's above the 200-day and the 50-day. So, while there could be pullbacks, we got news this week with the Baker Hughes rig count at the end of the week and the EIA report coming up. So, but on an overall value situation, it does seem like if this move above 60 on crude is not just a head fake and maybe the beginning of a breakout, there could be some value in energy sector this year and maybe this year and next year. And it's not coming out of a high area either, so there could be some legs to it if this move above 60 is real.
All right. Energy. I think there's a real common theme with energy among at least 3 of us. And I'm going to show trade. It's interesting, Christian, that you mentioned Halliburton. We've been in this since early January. No, late December. We got into Halliburton 47.46 and rode it all the way up. So pretty pleased with that. And it was a combination of technical analysis, which is most important to me, and then looking at the overall sector. But we had I said earlier that I combine Elliott Wave and Ichimoku Cloud. So, here's a big impulsive move. This is clearly a 3. Perfect correction 4. Now the next impulsive wave 5. Starting, and when it broke through the Ichimoku Cloud, when it broke above the 200 SMA, we were watching the sector, then came look for individuals. It was already up here. Said, man, there's a trade right there. We jumped on it. And our target zone is 57.08 up to 68. So we're approaching that target zone already. So that's a pretty stellar trade. And then semis came up as well. I'm actually long and still like AMD. I like it for a short-term trade. They got earnings coming out on the 30th. So we're trying to catch a trade. We got it on the 60-minute chart. I'm showing the daily. But we're either going to be deep in profit or out and take a little profit right before earnings, and then we'll look at getting back in. The longer term, this is another wave 5. Here's the big one they had, and now they're starting back up again. So the longer term price target on AMD is above 17 bucks, and they trade at phenomenal volume, really deep market. The options on it are awesome. So we really like AMD. We're long for a short term. We'll probably get in for a little bit longer term trade. Again, take it up here through the rest of the year, or a few months for sure. So I know, Andrew, you had already shared a trade, so that's why I jumped you there. Unless you got any other thoughts you wanted to share.
I mean, I always have thoughts. So I'll talk about earnings a little bit, because I've actually been playing earnings to the short side, and I'm 2 for 2 so far. I don't want to jinx myself, but we saw a little bit of unusual option activity in Alcoa, put activity, and then I looked into the historical data, and I saw Alcoa's actually sold off 6 of the last 8 quarters. So I put on an even money put spread, and Alcoa got crushed on earnings. And then IBM, I thought it was overbought here, and also I put on a put butterfly. Put butterflies on measure move targets are one of my favorite trades in the world, and they work very well on earnings because it's a catalyst event. And I put on the 65, 62.5, the 67.5, 62.5, 57.5 put fly, and I did that for about, I want to say $1, and it went to $4.50. So I got about 450% returns on that one. So I did put on a small Netflix position. When I'm trading earnings, my earnings trades are very small. I try not to risk more than $800 at most. Actually, and I got long INFY for earnings. So Netflix, I am short going into earnings. I bought the 225, 222.5 put spread for $1.25, risking 125 to make 125. I think Netflix is overbought here. I can't imagine how good their numbers are going to be. It has also sold off 5 of 8 quarters. So earnings, I've been playing to the short side. I'm kind of, $375 a risk. I did literally a 3-lot in Netflix. So, if I win, it's great, $400 in my pocket. If I lose, it's not the end of the world. So I'm short Netflix for earnings tonight.
All right. Netflix for earnings, short. Very good. So David had, every week he has a special question, and this week's special question is a part A, part B. But before we get to that, I mean, the big news right now, outside of any kind of planned economic report, is, of course, the government shutdown, which the market is obviously completely shrugging off at this point, right? Non-event in terms of the market. Over the weekend, I was looking. There's a pretty cool chart put out by LTL Research that shows the market performance over the last about 12 government shutdowns, going back to 76. And pretty interesting that the response of the market has fluctuated from like -3 to +2 during these incredibly artificial government shutdowns. But maybe each of you weigh in with a thought about, if this thing continues through this week, what do you think the market reaction is? There going to be, would that be a catalyst for a move, or are they going to continue to ignore it? What do you think, Christian?
I really think, just what we've seen so far, kind of into the weekend, where it was a little bit of chop. So I mean, I don't think it's really going to phase the market. I don't think, I'm just throwing this name out there, but it could be any name, but I don't think really it's going to hold back Amazon. It's going to hold back Google from really advancing. So I think it's just, it's noise. And I think a lot of times when there's political headlines out there, it's just that, it's a distraction. So it sounds like they've already made a decision. But we're going to come across this again in a couple weeks again. So we're going to have to live with this, headlines for a while. But I think it's just noise. I really do. And just things to kind of distract you from, looking at, the technicals and the fundamentals, which to me look very strong.
All right. Noise. I like that word. If the government shutdown continues on for a while, an impact to the market?
I think that what people are focused on and have been focused on is how to evaluate stocks when you drop the tax rate from 35 to 21. And in 1987, where we came after the last tax thing in 1986, prices got extremely wild on the upside. And I think that there's a potential that that'll continue because people just don't know how to evaluate these stocks with that different tax law. That doesn't mean that we're going to, go to infinity here, but I think that this year can be extremely wild on the upside, and then by the end of the year, they could have some kind of a situation that could cause volatility on the downside as well. So I think they could care less what this government is doing. I think they're trying to figure out how to evaluate stocks after they got a 40% tax cut.
All right, Andrew.
Yeah, I'll tell a little bit of a story here, and then I'll go on. I used to be in the General Electric pit, and I traded GE, and I had a massive position. I was always short gamma. So if I was short gamma, I was long theta. So basically, I was long delta, long skew, short gamma, long theta, short vega for GE for numbers of years. And one time over the weekend, there was some huge article, and then back in the day, it was Yahoo Finance. That was like the big, where you get your source of information. So I went to Yahoo Finance. The big news was GE got an $8 billion deal in Japan or China, and I was massively short gamma. So all weekend I'm looking at my plots and my P&L, and I'm figuring out how much money I'm going to lose if it goes up 50 cents, 75 cents, $1, $1.50, and like the markets are obviously closed over the weekend. So I was nervous. It's like the number one story on Yahoo Finance. I come in Monday morning, it's up 8 cents. So if I had to go through all the news, why I think this market should sell off, it would have me massively short. But the fact of the matter is all supply-demand curve between buyers and sellers. So the market continues to move higher. So that the point of that story is I don't look at news ever. Like you could go to Seek and Alpha, you could find 500 articles why Apple is going to go up, 500 why it's going to go down. So I've stopped looking at news anymore, and all I look at is price action, price momentum. The one thing that I do find is interesting is the VIX is trading 11, and we're at all-time highs. And usually as a generalization, volatility goes lower as the market goes higher. We got under 9 on the spot VIX about 3 weeks ago. But the fact of the matter is that we are actually making big moves. So part of CBOE's volatility index, known as the VIX, is 1, uncertainty, and 2, the measure of the moves. The futures are up 15 points today. If I looked at the SPY straddle, since volatility is higher, they're implying a bigger move between now and the end of the week. So my big thing is I'm not looking at news. Every pullback's been bought, but I'm watching for a big, massive reversal day. We actually got one of these other day, and then we broke through new all-time highs again. So I am long this market's stock specific, but I'm very, very skeptical. The RSI we talked about above 80. I think we're going to hit one of these massive reversal days, and it's actually going to stick. So we had that huge reversal day on the 16th where we took out all-time highs and both basically closed on the lows. 2 days later, we go through those highs. So I am long. I'm skeptical. I want the market to sell off. I trade better in a bear market than bull market, but I've been long for 3 years.
Boy, a lot of information and a lot that I agree with. I prefer a down market. It's moving faster, and I can make a lot of money in a down market. I've made more on drops than I have on going up the stairs. Make more in the elevator going down than walking up the stairs for sure. And I can't wait till it actually reverses and heads down. It's going to be awesome. And I completely agree with you. I do pay attention to the news because I'm a news junkie and I want to know what's going on. And if there's something big coming, I want to know if there's a disruption. But I make no trading decisions based on the news or planned news. All my decisions are based on price action because that's the only reality in the market, price and volume. Everything else, speculation. Pretty interesting. So some of us touched on it. David's special question for the week was, where do you think S&P 500 is going to close for the year? So, wow, tough question. Do you think S&P is going to close up for 2018 or down? And I'll lead off just for fun. Break the order up a little bit. I say down. I think there will be a catalyzing event. All the measures we've talked about the length of the bull market, its oversold nature, and even though fundamentals are good, maybe right, it has all the look of a very toppy market, just like we saw in other bubbles. I think it won't take much. We'll be able to look back and go, oh, that was the event, and it won't really matter what it was. There will be something that turns sentiment, and it'll drop pretty fast. So I think we'll be down by the end of the year. But that's purely speculative. I'm not trading based on that. I'll trade when it actually does turn and we get setups. What do you think, Christian? Up or down for the year?
I think the trend is your friend, and I will say up. There of course could be something that derails us and causes us to reverse, but I'm just not in the I am not in the business of making predictions when that will be. Certainly, if we start to break down, and I would say at this point, considering how far up we are, I would say the the 50-day moving average would be something to watch. But clearly we're way above the 50-day moving average. But I will definitely say higher, just looking at what international markets are doing right now. Not to say I think I would be. I'm always in that skeptical camp, so I'm always worried about something that will derail us. And as I'm long positions, but it's completely unpredictable to try to say when and when that will when and how that will be. But the price will tell us. Price is always the leading indicator. And if we start to break even that 20-day moving average at this point, which is the blue line on my chart, then I would get a little bit more conservative. And at this point, yeah, in the major indices, considering that most of my positions are long and I've got a bullish stance, I am looking for a little bit of digestion in the market. The last thing I want to see here is a blow off top. So we're definitely super heated in several different indices in the US. So I would welcome a few days, and generally what I think going into now that Netflix is reporting after the close, which I really think is the heart of earnings season, we usually do get a bit of chop around earnings season. So I think chop would be really good for us to kind of just digest some of these overbought levels. And then I think for the rest of the year, we're looking pretty good. Of course, any unforeseen events could change the direction.
Yeah, absolutely. And even if the Fed surprises and talks about more rates, if they get worried about, the only thing that really gives a Fed governor or the chair cold sweats, I think, is the specter of runaway inflation, right? And they definitely would want to be out in front of that.
Yeah, and it's I think you hit the nail on the head. There's a new new head of the Fed, and we have yet to really hear from that that new head. So it's definitely a variable that people aren't really considering. I think they're thinking, oh, ho hum, we're going to get 3 rate hikes this year. But if inflation starts to really tick up, that agenda is not set in stone.
That's right. And higher rates, typically can cause a shift to capital, right? Particularly people that got a lot of gains locked in on the equities might think about just moving over to fixed.
Absolutely, I agree.
And that, yeah, Jim, by the end of 2008, what do you think?
Well, I did a little homework here, and I'm trying to figure out what has happened the last time we had a big tax cut. So I went to look at the S&P back in the 2 years prior. So in 86, it was at 208, and at the end of 86, it was at 264. So that was about a 25 to 30% jump. And then the year 1986 through 1987, it went from 264 up to as high as 340, which is another 30% jump. But it started the next year, 1988, at 250. So it was down about 5%, which looked pretty moderate. But anybody who was involved in that type of activity knows that inner year, it was up at 340. So it was up 30% at one point. So going into 2016 from 2015, we're at 1918 on the S&P. The next year, going through 2016, you're at 2275. That's another 20% jump. And then last year, we were 2275 to 2683. That's another 20% jump. And so, if we were to, go up big, 20% or better and get up, over 30,000 on the Dow, I think that we could have some kind of an event in the debt market, because if you think about it, the whole world is long these bonds at either negative interest or peanut interest. If they all wanted to get out and move over to equities where all the money's being made, I don't know that there's enough liquidity to handle a lot of selling in that bond market. Anybody looking at the bond future, it's hanging on by the skin of its teeth right now. And an acceleration to the downside is certainly not a shock if it were to occur. What the shock would be is that obviously it could affect the financial markets quite a bit. So long story being short, looks to me like a very bullish year starting out. And then I think quarters 3 and 4 might be where you'd want to be careful. And one thing investors might do is follow that S&P chart every month. And if you get a monthly high surrounded by lower monthly highs, then that could be an indication of exhaustion. And that might be the time to start scaling back some of this bullish activity. Obviously, Lord knows where it'll stop. So if you let the market tell you when it stops, you'll probably be better off. But you should be a little bit concerned if we go into a big acceleration phase, because the debt situation and valuations at some point, could be a situation of problems. And like you guys were saying with the Fed, if we start seeing wage inflation and other inflation picking up and we're down at 1 or 2% down here, they're going to probably have to recalibrate, and it might be a faster recalibration than people think.
All right. Andrew, end of the year for the indexes. What do you think?
Okay. So this is kind of like a question too. So I looked at that SPY, whatever. I can look at the S&P, doesn't really matter. So the SPY opened at 268. We are currently at 281. So that's what, 25 into 260. It's about 9% we're up this year. Is that right on my math? Anyways, so we opened at 268. No, it's 13 points, about 5.5%. So I looked at the December 268 puts, which would put us to unchanged on the year. And I was looking at the delta of that to give me a mathematical equation of what's the percentage chance that we move lower from the open of the year. So we opened at 268. We're currently trading 281 plus or minus 282. So I looked at the December 268 puts, and they were 34. So a 34 delta on those. So it's basically saying there is a 2/3 chance that we end up from the open of the year, and a 1/3 chance we end up down from the open of the year. I would take 2-to-1 odds that I think we go down in the year. So if it was even money, I would say probability math is that we end up higher, but it's about 2-to-1 in favor to the Bulls to the Bears. So I thought that was interesting.
All right. Yeah, that's pretty interesting. That's what. So if I'm interpreting you correctly, that's what the collective traders are.
I mean, obviously it's not like if we talk about it being up or down to the end of the year, that's more of a binary bet. And options have Greeks, they will move. So delta, gamma, theta, vega. But if I just looked at a pure out delta, it was a 34 on the 268. So there's basically a 1/3 chance we end up down in the year and the 2/3 chance that we end up on the year. Plus or minus.
Yeah. At least the way people are trading it now, right?
Yeah. That's to be expected with the market on its all-time high.
Right. But if someone gave me 2-to-1 odds, I would bet that we go down in the year.
Yeah, you're saying mathematically the payoff is better on the down move, but everyone is betting up.
Right, more or less.
We were talking about rates, and one of the trades I'm watching right now, I thought I'd jump in with another one, is short TLT. If it takes out this previous low at about 122.41, I think this is going to be a nice trade that we probably will trigger and take, but I'm waiting. So I kind of like TLT to the downside. And there's the opposite one of that's the TBT, the long, the inverse. But that's a nice instrument too, with big option market, lots of liquidity. And I think there's going to be a good sharp coming on TLT. All right. Well, I think we have made it through the entire agenda. You guys are efficient, on task, and I think we're about ready to wrap it up. David, did I miss anything? Just closing comments, right?
Yeah, unless anyone has anything else they'd like to add.
I do. Andrew.
All right, Andrew.
When can we get an all crypto trading research program?
What was that?
Sorry?
When can we get an all crypto trading timing research discussion? I would like to talk about Bitcoin and crypto only for an hour.
Yeah, I've been talking about that with people, and definitely still thinking about doing that soon. So
whenever you want, I'll be on any day, anytime.
All right, great. I'll let you know.
All right, well, we'll go around the panel one more time and just each person offer closing thoughts for the session. And if there's something you'd like to share, a link or a page or something like that, this would be the time to go ahead and do that. So, Christian, if you'd offer your closing thoughts, sir.
Yes, sir. Yeah, and I was just kind of piggybacking off of what you said in TLT. You know, just looking at some of the different instruments in for bonds. You know, I've been kind of in the same camp as you, waiting for the TLT to break down, waiting for it to break the 200-day moving average. And I know that's an instrument that the majority of traders look at, right? It's the long bonds. There's also, of course, the futures as well that look similar. But if you take a look at the IEF, that's the 7 to 10-year bond. Take a look. It's actually already broken below the 200-day moving average, and it's kind of giving you a little bit of a heads up with the 50-day moving average starting to slope down. So across different maturities, you'll see some of these bonds are moving down a little bit further. And you know, one of the things that I look at as well, besides option flow, is ETF fund flows, and we really haven't seen a lot of unwinding of the treasury market, but we've seen unwinding in other places. We've seen unwinding, a little bit of unwinding. It's whenever people start to talk about the high yield bonds and outflows, people get excited, but there's been a little bit of outflows in the high yield market. So that's kind of given a little bit of a signal about what's going on. And then also, you know, those high yield sensitive areas of the markets, the REITs and the utilities, also saw some heavy outflows last week. So it does look like there's some positioning, maybe not so much in the treasury market that we can see, because just those ETFs are not that large in terms of, you know, the assets that they're managing, but certainly in some other areas of the markets, they are starting to see a little bit of pressure and a little bit of a run for the exits. Not everybody running for the exits, but a few parties are running for the exit. So I think this is a great chart, as well as the TLT, to keep your eye on. But yeah, you can see IEF has broken down here. So it does have some other support, you know, to get through. But yeah, I'm looking at this as well. You know, I think if we break this support as well, but you know, as long as you're using some type of line as your support, as you know, your stop, and I would say a short here versus the 200-day moving average. And you can also do this in TBF, which is unleveraged, but it is inverse to TLT, now just barely above that 200-day moving average. So I really like a long in TBF. So just to kind of add my 2 cents in there. But yeah, I'm sorry to go on for so long, but yeah, just a little bit about our trading room. You know, this is the type of analysis that we go through every day. You know, our trading room, just like a lot out there, but you know, we're all on the same team, and it's a very collaborative team, you know, team building room. So you know, our product is you can get half off the first month of our trading program. That includes, you know, access to the trading room, and also access to our newsletter, which really kind of gets you ready for the week, as well as analysis after the close as well. So it's TribecaTradeGroup.com, and you can put in coupon code right now, TTG, to get half off the first month. Thanks again for having me on, and I really appreciate being a part of the panel.
Yeah, thank you, Christian. I always enjoy being here with you. Jim Kenney, closing thoughts, sir.
Well, one closing thought is that it'll be very interesting to see how the end of the week closes out with all that information coming out Thursday and GDP on Friday as it relates to the bond market. So if we get a big surprise on the upside with these numbers, I don't know if they'll be able to crack it, but it would be certainly disconcerting to be long bonds if these economic numbers at the end of the week start really taking off. Anyway, as far as Option Professor is concerned, we try to educate you on the uses and risks of options, whether you're looking for cash flow strategies like covered call writing or credit spreads, or you're looking for hedging strategies like collars or married puts, or you're looking to do two-sided limited risk strategies like strangles and straddles. You can learn a lot. Get a little more educated before you participate in things. And optionprofessor@gmail.com would be the way to let us know you have an interest.
All right. Thank you, Option Professor. Andrew, closing thoughts from you, sir.
Closing thoughts. I would love the market to just crash. I'd love Bitcoin to go to 50,000. Nothing. You know, I always say that, you know, I'm an educator in the space. I think everybody that listens to today's program should try everybody's product. Join Christian's trading room, join Dean's program as well. You know, try and see what works best for you. Every single person's trader, different risk tolerance, different reward to risk setups. There's a lot of really good educators on here. I want to thank you guys for always having me and my team on here. But, you know, go out there, and if you've never tried someone else's product, try their product and see if it's for you. And, you know, you got to invest money to make money. And actually, I don't know if Trump's changed this, but everything, if you talk to a tax guy, is education. So it's actually a write-off for any program that you do buy. So my closing thoughts, I don't have any links, I don't have any trials, but go out and try Christian's room, try everybody's product that gets on the show, because you guys have some really good educators, and I want to thank you for having me on.
Thank you, Andrew. It's good to be here with you, and thank you for that. That's good advice, I think, for people. You know, try things, see what's a good fit, and it's a really good point that all of our products are tax deductible, you know, against your trading gains. So again, I'm Dean Jenkins from FollowMeTrades.com. Here's my website. There I am. My flagship product is a stock pick service. I send out signals. No Lamborghinis, no bikini gals, no private jets, but we're just knocking out solid gains. I believe in complete transparency. Any of these buttons give you every single trade we took in those years. And I have a third-party CPA firm auditing the results that we claim. And I have a free newsletter. That's a good way for people to get to know me. You just come down here, it's called Beyond the Noise. You can sign up, get a free newsletter. And when you do, there'll be some trial offers, real low-cost offers to give things a try after you sign up. So that's it. That's me, Dean Jenkins, FollowMeTrades.com. All right.
Hey,
thanks, everybody.
Hey, Dean,
thanks, David.
Hey, Dean, I did want to mention that I did see some fancy guitars in the background of your room earlier. So you mentioned Lamborghinis and so forth. There's a lot of guitar there. Yep, there they are.
Yeah, but they're just Yamahas, man. There's no collectibles, just standard stuff, man. Yeah, nothing signed by Eric Clapton yet. All right. Hey, good being here with you guys. Fun session. And I'm going to go ahead and wrap it up and hand it off back to you, David.
All right. Thanks, guys. For everyone watching, as Andrew mentioned a few minutes ago, I am thinking about adding a cryptocurrency show to the Timing Research lineup. So if you have any interest in that, just reply to any Timing Research email or use the contact form on TimingResearch.com to let me know, and I'll keep you updated on that. Also, be sure to hit the YouTube subscribe button if you haven't yet to get updates on future shows. And join us tomorrow night for the 20th episode of Analyze Your Trade. That's January 23rd at 9 p.m. Eastern Time. Bassani, Michael Filigera, and Matt Buckley will be here for that show. And just want to thank all my guests again for today. Christian Fromhertz of TribecaTradeGroup.com, Jim Kenney of OptionProfessor.com, Andrew Keene of AlphaShark.com, and Dean Jenkins of FollowMeTrades.com. Thanks, everyone.
Thanks, David.
Thanks, David.